So we are recording EURJPY live trade. I'm seeing a sell setup here on EURJPY. So let's take this trade live. So what am I seeing here? Let's start all the way from down here and follow market structure. So what I'm seeing is here on the 4-hour time frame. There's nothing for me on the daily time frame. When you focus on market structure, let's start from here. You notice we have this lower low points, lower high, lower low, lower high, lower low, lower high, double bottom, higher high, higher low. Structure has been broken. We have this higher high here, higher low, higher high, higher low, higher high, higher low, higher high. You can call that a lower low since it went below that particular structure right there. So a lower low, lower high, lower low, lower high point. So now price has given me an entry signal, which is this particular candlestick right here. After creating that lower high point, we have this bearish engulfing candlestick here on the 4-hour time frame. Price rejected that resistance level with that doji candlestick, and also using this moving average as a dynamic level of resistance. So now we have this level, that resistance level right there. So what I'm looking for right now is a structure break to the downside on the smaller time frame. On the smaller time frame, like the 1 hour 30 minutes or the 15 minute time frame. So now let's check if we have any structure break to the downside on the smaller time frame, starting from the 1 hour time frame. Okay, we do have it right here. Let me draw that out also. So right here we have this lower low, lower high, lower low, lower high, higher low, higher high, higher low, higher high, structure break to the downside. So now I'm waiting for price to create a lower high point and continue to go bearish. This is what price just did. As you can see, we have that structure break to the downside from this bullish trend to a bearish trend. So what I'm going to do now is draw my Fibonacci from this push that broke structure to where price started to pull back up right here. So I'm gonna have a limit order here, a sell limit order right there at that 0.5 level of the Fibonacci, with my stop loss above 0.764 of the Fibonacci for about, let's say, 28 pips stop loss, and I'm going to aim for 3 times my risk. So I want to see price come all the way up, tag me in, and continue going bearish. So I'm gonna calculate my risk and place that sell limit order, and I'll keep you guys updated. Take profit, mother freaking smashed, bro. Clean trade right here on EURJPY. Easy. Look at what happened. Price broke that level, retested, melted all the way down. So let me break down this trade one more time. So what I saw was here on the 4-hour time frame, price has created a bearish market move from this point right here, breaking structure to the downside, creating a lower low, lower high, lower low, lower high. Give me that doji candlestick right there, followed by this bearish engulfing candlestick, signaling to me to look for sales on the smaller time frame so that my stop loss can be a little bit tighter. So on seeing that price has given me this bearish engulfing candlestick right here, I went to the 1 hour time frame and look for structure break to the downside, which price gave to me right here. As you can see, we have this lower low point. I was expecting a lower high point and for price to continue pushing downwards. So what am I saying basically? Let's say this is the 4 hour time frame and price is creating higher highs and higher lows. Yeah, and price breaks structure to the downside here on the 4 hour time frame. What I'm waiting for is a price to come back and retest that level that it broke, then give me some kind of entry confirmation. In this particular case, a bearish engulfing candlestick on that 4 hour time frame. Then I'll go on my smaller time frame like the 1 hour, 30 minutes or the 15-minute time frame and look for structure break to the downside. Once I've seen that structure break to the downside, something like this, then I will then draw my Fibonacci from that swing high, since I'm selling this time around, to the swing low where price started to retrace, and place my limit order at that 50% level of the Fibonacci with stop loss above 0.764 and my take profit around this negative 0.618. That's all I'm looking for. Super clean, super clean. Also notice how price used this moving average as a level of resistance, a dynamic level of resistance. So let me show you guys another example of how this particular strategy works. Clean trade there on EURJPY. So here's another example. We have this, let me draw it out. We have this market structure break right here, right? From this point, higher high, higher low, higher high, higher low, higher high, or you can call it a double top. Structure break to the downside. What did price do next? Price came back for a retest. Price came back to retest this level that it broke. Can you see that? Just to retest that level. Price rejected with this doji candlestick. What followed next? A bearish engulfing candlestick, signaling to me that sellers, they are about to control this market. That's when I now go to my smaller time frame and look for structure break to the downside. So now let's go to the 1 hour time frame and see. Notice this candlestick closed around 6 a.m. This is when the candlestick, this particular candlestick, it closed around 6 a.m. So now let's go to the 1 hour time frame and see. So where is 6 a.m? So this candlestick is the 6 a.m. closure. Before this one opened, this one closed around 6 a.m. So this here is that bearish engulfing candlestick. This here, that bearish engulfing candlestick that we saw on the 4 hour time frame. And if you watch closely, you notice that price has broken structure right here. Let me draw it out. We have this lower low point, lower high, lower low. Do you see? this low is lower than this particular low right here, making it a lower low point. Super clean. Then price pull back for a retest. So on seeing that that candlestick has closed with that bearish engulfing candlestick on the 4-hour time frame, that's when I will now go to my smaller time frame as I've been saying, then drop my Fibonacci from that candlestick that broke structure to the downside and where price started to pull back. Now what do you notice? We have this rejection right here. We had that rejection right there, but I would have set my limit order at that 50% level with stop loss above 0.764 and take profit around this negative 0.618 for about 3 times my risk. Do you see that? One last example. Let's look for buys example this time around for bullish market. So on the 4-hour time frame, we're looking for bullish engulfing candlestick. Okay, let's use this one right here, this particular bullish engulfing candlestick. So as you guys can see, price created a lower low here, lower high, lower low, lower high, double bottom, boom, higher high, structure break to the upside. Price created a higher high here, came back for a retesting this neckline of that double bottom. What did it do next? It gave us an entry confirmation, this bullish engulfing candlestick here on the 4-hour time frame. So what are we looking for next? On the 1-hour time frame, 30-minute or 15-minute time frame, we are looking for structure break to the upside. So now let's go to the 1-hour time frame. Let me highlight this level. The 1-hour time frame, as you guys can see here, this is that level. When did that candlestick close? Let's look at the time. Let's look at the time when that bullish engulfing candlestick closed on the 4-hour time frame. It closed around 6 p.m. This particular candlestick closed around 6 p.m. So now let's go and look for that 6 p.m. structure break. So this is that particular area that we saw on the 4-hour time frame. So now let's look for 6 p.m. So this is it. This is that candlestick that closed around 6 p.m. This particular one right here. Then I will draw my Fibonacci from this swing low to the swing high this time around, since we are buying, and set my limit order at that 50% level. This time around, a buy limit order. Don't forget, this here is that 6 o'clock candlestick, and these ones haven't formed yet. These candlesticks, set a limit order right there. Stop loss this time around below 0.764 of Fibonacci, like so, and take profit around that minus 0.618 of the Fibonacci. You can just aim for 3 times your risk. You see that? Super clean. Even if you adjust your fee from this push, super clean. So that's it for this particular trade, the breakdown. So in this case, this is a bullish market, right? Price came from a downtrend here, from a double bottom here on the 4-hour time frame, broke the neckline of that double bottom, creating a higher high, came back for a retest, giving us that higher low point, followed by a bullish engulfing candlestick, which is our confirmation to go long. Then we go to the smaller time frame and look for structure break to the upside, and boom, the rest was history. I'll see you guys in the next one. Peace.